Hello and welcome to the Riyal Deal, coming to you from the Al Arabiya English headquarters. This is your weekly bulletin, bringing you all the latest business news headlines and analysis from Saudi Arabia. Coming up, fresh PMI data from Riyad Bank shows that businesses in Saudi Arabia's non-oil sector are not only growing faster, but also hiring faster than they've done in 14 years. In just a moment, we'll be speaking to the bank's chief economist. Saudi Arabia's sovereign wealth fund, which is supporting the kingdom's Vision 2030 economic diversification plan, announces that assets topped $1 trillion in 2024. The PIF posted a net profit of nearly $7 billion despite economic challenges. With office rents in Riyadh hitting record highs and premium office space in Jeddah in hot demand, we take an in-depth look at Saudi Arabia's commercial real estate boom. Plus, in a sign of how much the Saudi capital has changed and how important it's become, a Riyadh edition of the much-loved board game Monopoly goes on sale in September. We'll be speaking to the game's developers. Hello and welcome to the program. Last week, we were talking about the International Monetary Fund raising its 2025 GDP growth forecast for Saudi Arabia to 3.5%. That was on the back of demand for government-led projects. Well, this week, we have another sign of resilient economic conditions and robust demand. According to new data released by Riyad Bank, the Saudi non-oil economy saw its Purchasing Managers Index climb to 57.2. That's up from 55.8 the previous month. Well, the PMI is an economic indicator reflecting overall economic health. And amongst other things, it takes into consideration business spending patterns and hiring. Well, a score above 50 shows expansion, and the latest figures are well above that threshold. Well, this same report says the Saudi businesses have been adding new jobs at their fastest. A bit more now with Dr. Naif Al-Ghaith, who is the Chief Economist at the Riyad Bank, who are authors of this report. Dr. Al-Ghaith, thank you very much indeed for joining us.
Very much, Tom. Also the non-oil economy. With the PMI, it looks into the non-oil economy, and it takes into account also the future output and the current things that happen within the economy, and also takes into consideration the employment. All these things take into account, and then we get the PMI, which points to an expansionary month for June, which could be translated that we'll be having another high increase in the non-oil GDP, which could be above the 4% from 4 to 4.5% for the second quarter.
Okay, just looking at the highlights of your report, I mean, we're talking here about a highly active labour market by the looks of things. What are the main drivers for the activity in the labour market then?
Okay, one, we could look at the report and understand that the employment has expanded from the previous months. And also when we look at the trend, we understand that the employment has increased the highest since 2011 May. So that is very high growth number and has been driven by multiple things. One, the sector, and within this survey shows that construction has contributed the most to the employment. Other things also point that employment is expanding because we have so many new orders, so many, if we could say also sales, that made firms or companies to hire more to get these sales done. So they have been trying to get more employee to get more output, and that's what pushed the employment to be higher than what it was, and that is another indication of the health of the economy.
So construction's one star performing sector. Are there any others that stand out for you?
From the survey, this is the major one, and it shows we have also the manufacturing, and it shows also this in the future output that the most promising sector is the manufacturing.
Okay, I mean, all of this is good news, isn't it? But there are some challenges associated with the hiring spree that's going on there in Saudi Arabia, not least a huge increase in staff costs. Does that worry you at all?
One thing we need to look at the entire economy, and we understand from the latest report for the Vision 2030 that the unemployment has been adjusted as a target from 7% for Saudi to 5%. Just recently, the unemployment report for this quarter, the first quarter, came out, and it shows also a new reduction for the unemployment to reach to 6.8. Unemployment for the total Saudi Arabia is 2.8. One is that the reduction in unemployment is challenging because we, as Saudi Arabia, is still a young economy or a young nation. Young nation means that we will have more labor forces coming. And then to reduce the unemployment, you also have at the same time an increase in employment force. So it's not you're only hiring, you need to hire at a higher rate than the employment force. That's one thing. Whether this is challenging in terms of increasing the staff, still there is room because we have unemployment. We haven't reached the full employment rate, so still there is a room for the employment to grow. We could look at also the inflation, and the inflation rate still is not high. It's 2.2 for the May, and this indicates it hasn't yet been reflected in the prices that we also saw in the output prices and the PMI survey.
Okay, just to sort of wrap up this conversation, how would you describe the overall sentiment amongst non-oil businesses right now?
Yes, within one of the components, we have the future output, and it has been growing, and it has growing, as we just mentioned, in the manufacturing. We have a growing economy and a growing in new sectors that hasn't been growing before, and it hasn't been tapped. So what we look at right now, a healthy economy and in the non-oil economy, and it has been growing, and it's growing in the healthy numbers.
Okay, well, thank you very much indeed. We really appreciate you taking the time to speak to us. Dr. Naif Al-Ghaith, Chief Economist at Riyad Bank. Thank you for your time.
Thank you.
Now, Saudi Arabia's Public Investment Fund has reported that total assets exceeded $1 trillion in 2024. But while total assets under management rose 18%, net profit was down from a year earlier, falling to 25.8 billion riyals. That's just shy of $7 billion. Well, the PIF is steering Saudi Arabia's economic agenda aimed at weaning the country's economy off oil. Well, by 2030, the PIF aims to have $2.67 trillion under management. That's up from a previous target of just under $2 trillion. Well, I'm here with Ali Raza, the Chief Investment Officer of Haytham Co. Ali, thank you very much indeed for joining us. Let me just ask you, why the drop in profits, do you think?
It's a range of factors, Tom. I mean, every enterprise goes through its fluctuations. We've been seeing a lot of macroeconomic volatility. There are global factors. Interest rates have been relatively high. There are some overruns on projects, some value realizations that perhaps haven't taken place as early as expected. So, these usually lead to asset write-downs. But all of that being said and done, I mean, if your question is one of a financial slump, yes, perhaps this is how we could look at it. But I think the real question is actually rather something else.
Okay, nevertheless, I mean, a pretty strong showing, is it? We're talking about some big numbers there.
We are, but Tom, the question we need to ask is, I mean, what is the Public Investment Fund? It is a sovereign wealth fund. What is the objective of the Public Investment Fund? PIF is contributing to building the country and evaluating things, investing in projects that will hopefully have legacies of 100 years and beyond. It's not a hedge fund simply looking to generate returns quarter on quarter. Now, I'll add a disclaimer to that. Of course, financial returns are important, but in the case of a sovereign wealth fund, and especially one like the PIF, the shareholders are the public, and the returns are the good of the public. I mean, let's pull some contrast, right? So one of the biggest investments, one of the most exciting projects is the establishment of Riyadh Air. Nearly 200 planes on order at the moment. tens of billions of dollars worth of planes. There's investment into the incredible technology that they're building, into the traveler's experience. There's, really consider standing up an entire airline. Now, consider that this airline is not yet yielding any return because it's not in the air yet. So we hopefully will be seeing Riyadh Air go live later in this year. Contrast that with the likes of, say, Emirates Airlines over at our neighbors. And, that airline contributes an estimated almost 15% of the GDP of the country. Now, we could pull similar contrasts across other projects in the world, but these are the things that we have to consider when we're thinking about the yield or the return of the fund. There are a lot of unrealized assets within the organization right now. There are a lot of projects that are upcoming, like the FIFA World Cup, like Riyadh Expo. I'll give you a number, right? 100 billion. That's the estimated economic contribution for Riyadh Expo 2030 alone. FIFA World Cup, I won't attempt to estimate any numbers there as yet, but what I can share with you is that when the FIFA World Cup took place in Qatar, some estimates said that it contributed up to 4% of the GDP of Qatar. So, one element of this is the fact that there are a lot of assets and projects that are currently under development. They are underway, in which the value has not been realized yet. Revenue is actually up, by the way. So just to flag, the total assets under management are up. Revenue is up. Profitability is down, yes. And we could dissect the financial elements of that. But if we look at it in the lens of what the PIF is doing for the public good, establishing entire airlines, establishing entire cities, establishing entire industries that take decades, if not centuries, for nations to build, all within the space of a few short years, the net return, I think, is quite positive. So it's a matter of which lens we want to look at it in.
Yeah, I can see you've been posting about this on LinkedIn, got lots of reaction, lots of engagement with your post. Just to sort of sum this up, Ali, do you think it's fair to say, a very simple analogy, but would you say that the PIF has essentially been planting the seeds during the last few years, hasn't yet harvested them? Is that basically where we're at?
Without question, Tom, without question. If I wanted to build a factory, I wouldn't just buy 3 pieces of machinery and then expect to start profiting tomorrow. But if I establish the supply chain, motivate the people, provide strong conditions, get the best technology in place, learn the processes, and set it on its way, I may just end up building the next Siemens of the world, the next GE, the next whoever is to come out of Saudi Arabia. So that is what's really going on over here.
All right. Well, thank you very much. We're going to leave it there. Ali Raza, Chief Investment Officer at Haytham Co. We'll speak to you again a bit later on. Let's take a quick look at some of the other stories we're following for you now. Saudi Arabia's oil exports are reported to have soared to the highest level in more than a year during the month of June. Crude exports rose by 450,000 barrels per day from a month earlier. Well, last month's increase came against a backdrop of concerns over supply disruption resulting from the conflict between Israel and Iran. During a visit by the Indonesian President Prabowo Subianto to the kingdom, the two countries have signed a raft of deals and MOUs worth around $27 billion. This in the fields of clean energy and petrochemicals. Well, Saudi Arabia and Indonesia also agreed to bolster cooperation in the supply of crude oil and strengthen cooperation in mineral resources. The Saudi-backed electric car maker Lucid has announced a 38% rise in Q2 deliveries. Lucid delivered 3,309 vehicles in the quarter ending 30th of June, but missed Wall Street expectations. Well, as demand for Lucid's luxury EVs appeared to soften, the company's CEO says that US tariffs have driven costs upwards overall. And the Saudi flag carrier Saudia has announced it will start operations from Riyadh to Moscow in October. The announcement of these 3 weekly flights comes in the context of a sharp increase in tourist numbers between the two countries. Well, a new e-visa program is thought to be a key factor behind this growth in visitor numbers. Now, today we're going to take an in-depth look at Saudi Arabia's real estate sector. Well, in line with Vision 2030, increased home ownership and increased tourist numbers are fueling demand for both residential and commercial property. Well, specifically on the commercial property side, office rents in Riyadh are reported to have hit record highs in Q1, up 23% year on year. This as foreign investors and global businesses set up shop in the kingdom. That's according to a report from the global property consultancy Knight Frank. Well, both Riyadh and Jeddah are seeing strong demand for premium office space, with occupancy levels in top Jeddah developments now standing at about 95%. Hotels are also seeing strong occupancy levels, boosted by a sharp increase in foreign tourist numbers. Well, let's find out more now about the Saudi commercial property market, and we can speak to Saud Alsulaimani, who is the country lead and head of capital markets for Saudi Arabia at JLL. Thank you very much indeed for taking the time to speak to us.
Thank you, Tom, and pleasure to be here. And I'm delighted to be hosted by you today to go over one of the very interesting topics in Saudi, actually on a global level as well, which is the Saudi real estate market.
Yeah, absolutely. Lots to talk about. Let's start with an overview of what you're seeing with regards to property prices, both in terms of rental and sales. What are the key trends you're seeing in Saudi's big cities?
Well, it depends on the asset class. Without a single doubt, the office has been the hottest in terms of price increases, followed by land prices over the last few years. But now with all the government regulations, it started a little bit to be more mature and stabilized, and to start to be reduced a little bit over the past 2 months, I would say. The retail has been almost stable, some decline on the lower quality bit. So it's not as fast in terms of pace as the other sectors. When it comes to industrial has been witnessing significant growth due to the limitations of the available quality supply. And for the hospitality, there's been a significant shift toward Riyadh over the last few months due to all of the events and conferences are being hosted. And finally, when it comes to the residential, Riyadh and Jeddah are a bit ahead of the curve, but Riyadh again been witnessing a significant increase over the last few years due to the massive relocation of population internally within the kingdom to Riyadh, migration and international expats.
Okay, that's really interesting. Clearly, lots of new supply in the commercial space, especially in big cities. Is that catching up with and matching demand, would you say?
Well, at the moment, when it comes to office space specifically, the answer is not. It's not catching up yet because there are several factors. One, the supply is coming slower than anticipated. And number two, the demand is increasing significantly internally from the kingdom when it comes to government and local companies, and also the regional headquarters and new international companies. So there is a much higher pace in demand and a bit lower pace of supply.
Okay, well, when it comes to what's driving demand for commercial space, which are the main sectors you're seeing leading the way?
Well, it goes across the board, starting from the professional services, consultancy services, international and local banks, government entities, oil and gas, especially in the eastern region. They have their own requirements and normally big office space requirements. Law firms as well. There are lots of international law firms entering the Saudi market over the previous few months. So that also a key sector within the office market.
Okay, and tourist numbers set to reach 150 million people by the year 2030. You've got lots of big events in Saudi Arabia as well coming up. I mean, across the whole hospitality sector, is there enough capacity for all those people?
Well, the answer is, as of today, the current hotels wouldn't be sufficient for sure, to your question. However, given all the upcoming supply, mainly driven by the large-scale and giga projects. We believe the future outlook will be stable in terms of supply versus demand across the board, either in Riyadh or Jeddah and Eastern Province, or the, let's say, the smaller tier cities, because there are many future supplies coming to the market. So we believe all what has been anticipated as of today, plus the upcoming years, will be able to catch up with the demand for the 150 million.
Okay, so huge projects, obviously, as well, supporting Vision 2030. They're attracting lots of investment, I'd imagine. Is it mostly domestic or international capital that they're attracting?
Well, actually, there is a huge demand for income generating over the few years, actually. So from an income generating perspective, there is a huge demand from both local and international, but unfortunately, the current existing liquid income generating assets, high quality, are very limited. This has been witnessed. We've had to, we were mandated to sell one of the very prestigious compounds in Riyadh, and the amount of demand on it was just unbelievable. We couldn't expect the demand that we had locally, regionally, and internationally. So that was a great example. And for the development projects, I would say at the moment, locally and regionally, are most of the investors, because development comes with its own risks. For internationals, it's normally they start with income generating, or they come as financiers, private debt, and then they put equity. It's a normal trend that we've been witnessing in almost all countries that had construction boom. So internationals started to come, but mainly on a private debt element rather than pure equity. However, we've seen some, they already did it, but it's becoming increasingly toward income generating, especially that most of them are aware that today there are lots of income generating assets will be coming to the market soon.
Mr. Alsulaimani, as we've been talking, we've been discussing the exciting projects coming up in Saudi Arabia, huge projects like NEOM, the Red Sea project, the King Abdullah Financial District. How involved is JLL in those big projects?
Well, we are proudly engaged on the majority, if not all, the large scale and mega projects. We normally don't mention names for confidentiality reasons, etc. However, we are engaged across the board. We are one of the only companies across the world that can cover end-to-end services. So we cover the entire development cycle, starting from consultancy, valuation, moving to the execution phase where we do the project management, construction management, until the property management and facilities management. And then we help also with leasing and investment sale or investment management. So that became a competitive edge. We are also proud that we were the first international firm to enter Saudi Arabia. That was in 2007. And that also provided us a competitive edge. And our vision was long-term. Today, we are close to 600 employees in Saudi, covering every single asset class, every single service. And that provided us with a great competitive edge on the projects when it comes to large scale or mega projects.
Okay, so one of the things I wanted to ask you just before we finish is about some of the projects that JLL has been putting out, some of the reports, I should say, that JLL has been putting out. One of those reports focuses on demand for warehouse facilities. Just tell us what we can take away from that warehouse report. What does it tell us?
Well, I mean, first of all, the demand for quality warehousing has been increasingly witnessed across all the cities. Okay, so it's not just Riyadh and Jeddah. And the players within this sector are also very limited. Okay, so this also, from a development standpoint and investment standpoint, created a huge shortage in the market. So we've witnessed a massive surge in demand, boomed mainly by e-commerce. Okay, So that had a huge contribution to the equation, and all the predictions anticipating by 2030 to have 80% contribution by e-commerce to the entire retail sector. The National Industrial Development and Logistics Program, NIDLIB, had a huge element into that demand as well, because there have been many clusters entering to the market. We've witnessed global institutional investors entering the market, including DP World, Gulf Islamic Investments, Maersk. They are making a significant impact in the market when it comes to that, as well as DHL. They acquired recently a major supply chain logistics company, and they had their JV with the Saudi Aramco. So all of these are making a huge impact to the market. Going specifically to what are the things that having a huge demand, I would say grade A for sure when it comes to offices, cold storages, last mile solutions, and as well as quality data centers, which we consider as part of the logistics sector as well.
Okay, and just before we wrap up, looking ahead, what would you say are the top priority areas that JLL is going to be focusing on in the kingdom?
Well, we are focusing again on, we have a very two different strategies we are working. So in terms of the short to mid-term, we are focusing in our key sectors today in the market when it comes to, especially the one that with high potential, like data centers and warehouses and specialized services, entertainment, healthcare, sports, etc. So this is like from a sector's angle. From a services angle, we are betting on two main sectors of services. One of them is the capital markets advisory. We are witnessing lots of PPPs over the last few months. I would say since Q3 2024, this has been the hottest topic in the market, which is engaging the private sector, procuring developers, engaging international developers and investors. It's been a very important element for us that we are focusing on at the moment. The facilities management, we believe, would be one of the very important elements as well in the Saudi market, given the growth of all of these construction and projects that are being delivered over the next few years. It will require very high quality service providers to come and help to manage those.
Okay, we're going to have to leave it there. We're out of time, but thank you very much indeed. Really appreciate it. Saud Alsulaimani, Country Lead and Head of Capital Markets for Saudi Arabia at JLL. Thanks again.
Thank you, Tom. It was a pleasure.
Well, let's get more on the real estate sector now. We can speak to Ali Raza, who's the Chief Investment Officer at Haytham Co. Ali, thank you very much indeed for joining us and staying with us, I should say. What would you say are the main trends you're seeing in the Saudi real estate sector right now?
So, Tom, the growth is robust. I mean, naturally, with all of the development taking place across the land, the market is heating up. Prices are increasing, which is a point of contention for some, perhaps, depending on how we look at it. But all in all, there's a very positive trajectory. There are some thematics here. I mean, there's a major emphasis on logistics, and a lot of growth is being driven by e-com development. We just heard from our friend at JLL earlier on. There's an extensive program in place by NIDLIB, the National Industrial and Development Logistics Program, to develop up to 46 logistics hubs around the nation. Cloud infrastructure is the name of the game almost anywhere in the world at the moment, and Saudi Arabia is no exception. But specifically within the kingdom, I mean, the initiatives that are underway with the work of Humane, the hyperscalers that are taking a serious position in kingdom, the local data center developers like Data Vault and others, there's a significant piece of growth within the cloud infrastructure segment as well. Now, I mean, at the moment, the market is very heated up. There's a 98% occupancy rate in the commercial market in Riyadh. So I would argue, I think one of the biggest trends that's really coming out of this is the development of Riyadh and Jeddah, cities like these, really becoming commercial hubs more than anything. And there's, of course, a lot of flow-on effects of that. But that, I think, is the biggest trend that we're seeing.
Yeah, I mean, when you speak to people in Riyadh and in Jeddah, they tell you it's difficult to find office space at the moment. Is that something you're hearing from your contacts, your business associates, Ali?
Well, at 98% occupancy rate, yes, it is very difficult to find an office space. But why is that happening? I mean, these are all positive indicators nonetheless. Not if you're moving offices in the very, very near future, but the regional headquarters program, right? This has been one of the biggest drivers of commercial activity in Kingdom. The regional headquarters program has seen over 600 international firms set up their regional headquarters within Saudi Arabia. And I mean, this is from the likes of Oracle to ServiceNow to Adobe. I mean, the list could go on, right? We're talking some of the largest cap names, household names that we're all familiar with. They've now chosen Saudi Arabia as their home, as the regional headquarters. So naturally, this is going to bring in an influx of expats, investors. I mean, in the real estate sector in particular, there's been almost a 40% growth in FDI. So whilst the FDI numbers were slightly lower on other fronts, actually in real estate, we've seen north of 40% FDI. So, again, I mean, go back to the original point, the market has heated up. The commercial activity is only going to continue to compound from here, from what we can see. And that is most certainly having somewhat of an impact on the office space.
Okay, so just to sum up, Ali, what would you say is the overall health of the real estate sector, both commercial and residential? How would you describe it?
So both are extremely healthy and moving in a positive direction. Now, let's break that down, right? So office occupancy is high, challenge for those looking for an office, but also an indication of the business sentiment, the flow of foreign direct investment, the commercialization of these city hubs like Riyadh and Jeddah on the residential front. So the government has taken many initiatives to maximize home ownership and maximize home affordability. There's a number of programs in place which have seen the reduction of the minimum deposit required to purchase a home through mortgages, the reduction of age, because Saudi Arabia, those of us who know the land know that Saudi Arabia has a very young population, right? Almost 65% under the age of 35. So the age to purchase a home in one of these programs has been reduced from 25 to 20. So when you compound the industrial development, the economic changes, you look at the ambition from the young professionals, the enablement of home ownership and a reduction of affordability, when you compound all these things, whether commercial or residential, there's a very positive trajectory that's showing in the current climate.
Okay, well, thank you very much indeed for that. Really appreciate it. Ali Raza, Chief Investment Officer at Haytham Co. Thank you for your time. Now, our final story for today's edition is also closely related to the property market. Well, as a reflection of the major transformation the Saudi capital is undergoing, an all-new edition of Riyadh Monopoly is set to go on sale in the coming weeks. Well, Monopoly, which has been around for nearly a century, is the best-selling board game in history. Well, those behind the Riyadh edition say that they see this game as celebrating Riyadh's rich heritage and modern transformation. Well, we're joined now by Adam Jackson, who is the COO and the co-founder of KEAD Entertainment, or KEAD Entertainment, I don't know which one it is, which developed the Riyadh edition of Monopoly. Thank you very much indeed for joining us. Just first of all, Adam, what does it say about Riyadh that the city is now on the Monopoly map?
I think it enters the family of Monopoly and basically iconic cities that are represented all around the world, often found on a Monopoly board. So in many ways, it's enabling Riyadh to enter into that realm, and it brings familiarity to people as well from such an internationally recognized brand that people now can sort of relate to Riyadh City by it having its place on that Monopoly brand.
Okay, where did the idea come from? How did it strike you and your associates that now was the moment to launch this?
Well, it started off as a whisper, as these things sorts of do. It was about 14 months ago, and it was sort of a lightning bolt from heaven, so to speak, that sort of landed on our laps. And then from there, we sort of explored the idea further and negotiated some rights and things like that to enable us to do it. And that was sort of like the planting of the seed. And then like a snowball, it sort of grew. And then, we got good support locally. Our first partner was Diriyah. They came on board and really got in behind us and supported us. So, we were really appreciative of the level of support that the Riyadh business community and also cultural tourism associations got in there and supported us.
Yeah, it's a great game, Monopoly. Everyone seems to love it, which is why it stood the test of time. What sort of reaction have you been getting there in Saudi Arabia when you tell people about this project?
Yeah, a lot of excitement, a lot of buzz, a lot of chatter. As you know, the population of Saudi Arabia, below the age of 30 is 63%. So there's a lot of youth engagement there. They're excited about it. They sort of see it as another doorway that the country has entered into or through under the 2030 vision. So they sort of see this as just another milestone that's been reached and achieved of where they once were and where they're progressing to. So, we've been delighted with the level of and the response and the enthusiasm, the passion, and, dealing with, we've had 14 different stakeholders involved with the game. And each of those have, 14 different teams. And so a lot of those people in those teams, it amazes me the immense passion and focus and basically ambition that these teams have for the city. And that's conveyed, it was always conveyed, when we were putting the final touches and the planning processes in place for Riyadh Monopoly. So it's quite remarkable. It's truly, it's a testament to the people of Saudi Arabia.
Yeah, while you've been talking, we've been looking at some stills of people playing the game. I mean, it reminds me quite a lot of the version. I grew up on the London version, but there are lots of versions of Monopoly, and I think the original one was New York. But has it got roughly the same sort of look and feel, or have you got some different touches that you've introduced to this version?
Yeah, that's a really good point. We've introduced quite a few different features. So, for example, Monopoly City Editions now will be in the square format, so it's moved away from the rectangular format. Our own personal touches were focused on the tokens. So we made them gold as opposed to silver, and we only kept one of the traditional tokens, which was the gentleman's hat. Outside of that, we actually designed and had new tokens made, 5. So we have the PIF Tower, which is in KEAD, of course. We had the camel representing the heritage of Saudi Arabia through Diriyah. We had the coffee cup, we had the STC racing car, and we also had the Saudi Airlines aeroplane. So that was one of the key areas. And then there's other, sort of some more particular design features around the brand around the box of Riyadh and the name there, which is sort of a bit different. So, my wife, Fiona Jackson, she plays a key part inside the KEAD group. She's got a strong eye for detail and for design. So she did a great job there in bringing those sort of aspects to life to differentiate it from what has been before.
Yeah, I was just wondering while you were talking there, I mean, the version that I grew up with had Mayfair and Park Lane as being the most expensive, the sort of purple ones that you didn't want to land on if you didn't own them. I think in the New York edition, it's Boardwalk and Park Place, the really expensive properties. Which are the equivalents in Riyadh?
Yeah, that's a very good point. They were CAF'd, both were CAF. So the traditional Mayfair and Park Lane were the CAF Plaza and Skywalk Plaza. So Skywalk, so it's the CAF Skywalk, very beautiful, and because the journey of the board game is sort of an old merging into the new, and the final 2 squares on the board being the new CAF, iconic skyline. So there was a play there with the story and the narrative that we were aiming to convey and communicate, as well as that sort of, strong economic, financial sort of powerhouse that CAF plays within the kingdom as well. So it was quite fitting that they were on those last two squares.
Okay, so you got the most expensive properties. Everyone knows, Monopoly's also got some less expensive properties. Probably, I don't know if it's a sensitive topic to ask which are the least expensive properties, but let me just ask you how you came up with the criteria for how you ranked the value of the different properties.
Yeah, we didn't actually. What we aimed to do, as opposed to the traditional way of, like you just mentioned, for example, the first square is British International School Riyadh, and that's the brown square, and that's because education is the first step in one's development in life. So that's how we sort of we played on the story of development, both sort of as a person and also within the city and the development of Riyadh. So then after that, the other brown square is the souk, and that's a very old traditional souk there within Riyadh. And then you make your way around the board as you sort of go. So it wasn't so much a dollar value as such. It was more part of a story and a chronological sort of time frame that we had attached to the different colours. And then we just sort of broke it up as well into the methodology behind it was different sectors. So Diriyah, for example, to match their colour palette, they went with the orange. They took the 3 orange squares. 3 kingdoms in the history of Saudi Arabia, so they had 3 squares. So it's sort of yellow was focused with tourism, so that's where the Ritz-Carlton was. It fitted well with their offering. And then, the dark green squares, you've sort of got Saudi Airlines. We had our official partner there, Saudi Youth Society, STC. So, it wasn't so much a monetary sort of focus. It was more where they fit within the narrative and the methodology that we had sort of applied.
Sure, and actually today, the Old Kent Road, which was the cheapest one on the London Monopoly board, is actually now quite an expensive part of London. Just lastly, Monopoly is, according to the Guinness World Records, the best-selling board game in history. I'm not sure if that's true or not, but that's what I read. What do you think is its enduring appeal, Adam?
Yeah, it's a good point. It's amazing. It amazes me that Monopoly has an engine of its own. We found that all the way through the project. There were dips and peaks and troughs of momentum and rhythm through the project. And sometimes when you'd hit a trough at the lower point of it, it would somehow just pick itself back up. There's just a worldwide knowledge of Monopoly. It's a great game on many different levels. For example, it teaches the young mental arithmetic. It teaches them money management skills, how to negotiate, how to position yourself. It teaches, entrepreneurial spirit, property sort of ownership strategies, rent, mortgage, the role of a bank. So it sort of beats the test of time. And as well as I do, we always compare things to bricks and mortar. So as long as we're here, even though we're in this digital age, property still plays a major part in our lives. And I think this is the board game that's closest to representing, in a fun, sort of friendly manner, how to play the property game without actually going and buying property.
Yeah, fun and friendly, unless you were in the household I grew up with. And we had quite a lot of fights over Monopoly. But thank you very much indeed. Really appreciate you taking the time to talk to us. Adam Jackson, the COO of KEAD Entertainment. Thank you for your time. Well, that is all we have time for on this edition of The Riyal Deal here on Al Arabiya English. Thanks for watching. Look forward to seeing you again next week.